Today we're going to review currency markets. Yesterday we saw no major financial data points or events to cover in today's video, so we decided to have a look at what's going on within currency markets. And what we think is useful before we look at currency markets is to review first what's happening within fixed income markets and how that also relates to currency markets. So we've seen bond yields rise over the past number of weeks, and that's really for two reasons. The first being better than expected data out of the US, and that was in the form of the jobs report, where more jobs were added than had been expected in the US economy. And also secondly, an increased focus on the amount of government spending. So we know the US is doing a lot of fiscal initiatives, but we're also seeing places like the UK do higher fiscal spending after the budget announcement. So that's really leading to market participants reconsider the number of interest rate cuts that are required by central banks. And as they get reduced, we see yields move higher. And those dynamics also influence currency markets. If we look at the pair of sterling versus the US dollar and look at that post-Brexit average, we're about 6% weaker than what that average rate is. And what does that do? Well, that also imports further inflation into the UK economy. And that's because any goods we buy from abroad have to be bought in a local currency, which sterling is now weaker compared to. So we're starting to see market participants focus more on the UK, and that's because of those higher inflation pressures that they can see coming through and higher government spending, which ultimately is moving bond yields higher. So what does this mean? Well, it puts the Bank of England into a bit of a tricky situation where they're looking to cut interest rates to be supportive towards growth, but they know that they have these inflationary pressures coming through which would warrant keeping interest rates higher for longer. So thank you for watching today's episode, and we'll catch you in tomorrow's video.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.